What's up, everybody? Cody Shirk here. I'm freezing my butt off. I'm getting snowed on hard. But I'm going to talk to you about a country that has nothing to do with snow, and that is the Philippines. And the reason why I'm going to talk about the Philippines is because they've had some short-term drama that may make their market short-term even cheaper than they already are. And the long-term story is this country is looking very attractive from a demographic standpoint and valuation standpoint. So first, the drama. The current vice president, Sara Duterte, threatened to assassinate the president of the Philippines, Francisco Marcos. And the reason why she did that is because she's afraid for her own life. So she said, hey, if I die, I've already hired an assassin to kill you, the president, your wife, and any heads of state that are supporting you. And this, of course, is a pretty outrageous threat. But this is a short-term drama that the Philippines are going through. Now, it's worth noting that Sara is the daughter of Rodrigo Duterte, who was a former Filipino president. And she was elected with the current president, Francisco Marcos, in 2022 in a landslide election. They overwhelmingly won, but over the past 2 years, they've had a little bit of a falling out. And that's mostly because of their stance on how they should handle China and China's threats to the sovereignty of the Philippines in the South China Sea. Now, Francisco Marcos is actually the son of a president that was ruling in the Philippines who actually got overthrown in a coup in 1986. So this is a very interesting story here because you've got the current president and vice president of the Philippines who are children of former presidents of the Philippines, and now they can't even get along with each other. So I expect this to blow over in the coming months, but it may depress the markets within the Philippines for the short term. The longer term, the demographics of the Philippines is very interesting. It's a very young country. The average age is about 25. So this means that the people within the Philippines are having babies, they're buying cars, they're buying houses, they're going out to dinner, they're building companies, they're spending money. They're going to push forward the economy for quite some time. The country itself has a PE of about 10, so it's very cheap, especially compared to the US and other markets. So for investors in the US who are in equities that are very expensive, rotating into the Filipino market is quite interesting right now. The Filipino economy is growing at about 6% per year. That's projected in 2024, and then next year, 2025, is projected to be about the same growth. The major trading partners of the Philippines is China and the US, and the Philippines exports oil, timber, metals, and all kinds of important resources. So it's going to be a very relevant country for quite some time as well. So if you're an investor in the US looking for a cheap opportunity that has been inexpensive for a little while, but maybe get even less expensive because of this short-term drama, you should definitely consider the Philippines. You can find the ETF on US markets. It's EPHE, and that's the easiest way to invest there. And there is a Filipino stock exchange that you can pursue on your own as well. All right, guys, I'm freezing my butt off and I'm getting dumped on with snow here. I'm gonna get inside because I'm not made for this weather and my nose is running. All right, see you guys.